Hey everyone, welcome back to the channel. Today let's talk about the Fibonacci golden ratio retreat strategy, one of my favorite tools for finding high probability trades. So guys, for this strategy we will use only one tool, the Fibonacci retracement tool. Fibonacci works best when there's a strong trend, not when the stock playing tug of war in a sideways market. So for this video, we'll use this strategy on an uptrend on the daily time frame. But let's first start with the how to apply this tool part. So here I'm using trading view, and on the left corner you can see from the top it's the third option, super easy to find, right? So we are going to select this tool here and we are going to apply this to an uptrend. Start at the swing low and drag it all the way to the swing high, and that's it. You've got these Fibonacci levels plotted on your chart. So even if you follow a different strategy, you can use these levels as support or resistance for your stop loss or profit booking. So now we have all these levels here, but what we need for this strategy is just the golden ratio level, which is the 61.8% level. Well, this level acts as a strong support or resistance point. When the price retraces to this level, there's a higher probability of it bouncing back in the trend's direction. So this is going to be our main level for this strategy. Now let's talk about the entry condition for this strategy. It's crucial to wait until the price pulls back to the golden ratio level. Don't rush into the trade just yet because we're gonna need some confirmation here. So sometimes the price can dip deeper below this level and then retest it. That's why it's important to wait for a clear rejection candle at this level. So for example, on this chart, you can see a big green candle making a higher high, which suggests that this level, this golden ratio level, is acting as a support. And this is exactly the kind of confirmation we want. Personally, I prefer to take the trade closer to the end of the trading session. Why? Because I want to avoid false signals that might appear earlier in the day. And by the closing time, I'll just be sure where exactly the price is closing, where exactly the candle is closing, and what kind of pattern it's making, if it's making any. So here's a pro tip. If you're unsure about this setup, if you're unsure whether the candle is showing strength or rejection near the golden ratio level, what you can do is start with a pilot position. That is just a smaller portion of your intended position size. This allows you to test the waters, and if the next day brings another higher high or lower low in a downtrend and you're confident that the trade is moving as expected, you can scale into your full position. So this approach helps manage risk and builds confidence in your trade setup. Once you are in the trade, protecting your capital should be your top priority. So place your stop loss just below the 78.6% level. It's going to be your safety net. If the price dips below this level, it's a clear signal to step away. This indicates that the retracement is deeper than expected, or worse, it could be the start of a downtrend. In such cases, it's better to cut your losses early and preserve your capital for the next opportunity. Now let's talk about profits. Always aim for a risk to reward ratio of at least 1:2 or higher. For example, on this chart, your stop loss is just below the 78.6% level. Let's say about 80 points, right? That means your profit target should be at least 160 points or more. So again, here's the pro tip. You don't need to exit everything as soon as you hit your target. If the price continues moving in your favor, start trailing your stop loss to lock in additional gains. A smart approach is to book half your profits once your target is reached and then trail the rest using Fibonacci extensions for even higher targets. And that's it for today's strategy. If this helps simplify Fibonacci retracements for you, show some love by liking this video. I'll see you in the next one. Happy trading.